Welcome back to Tesla Daily News Podcast. Today is Tuesday, December 23rd, 2025. In the next few minutes, we're focusing on the Tesla headlines most likely to move sentiment and, ultimately, Tesla, a major California regulatory threat, a landmark Delaware court decision on Elon Musk's compensation, fresh signals from the Robotaxi race after a San Francisco blackout, and what the broader battery and EV policy backdrop could mean for Tesla's margins and growth. Story 1. California regulators are putting Tesla's ability to sell cars in its biggest U.S. market under a real, near-term cloud. The hook is simple. California's DMV is warning Tesla could face a temporary sales suspension in the state, reportedly up to about 30 days, tied to how the company markets Autopilot and Full Self-Driving. Here's the context. California is not just a large market, it's also a perception market. It influences national press coverage, sets a tone for other regulators, and it's historically been core to Tesla's brand and demand. The details from the reporting: California regulators allege Tesla's marketing may have misled consumers, and some coverage says Tesla has been given a window, described as around 60 days in at least one account, to correct issues or face sanctions. The risk investors should focus on isn't just a fine. A temporary restriction on sales activities in California would be a headline shock, could hit end-of-quarter delivery logistics, and would likely trigger analyst revisions around U.S. demand durability. Impact for Tesla: even if the probability of a full sales suspension is low, the market tends to price regulatory uncertainty quickly, especially when it touches autonomy claims. It can weigh on valuation multiples because autonomy is a key part of the bull thesis. Takeaway: watch for Tesla's formal response, any changes to Autopilot or Full Self-Driving naming and disclosures in California, and whether this escalates into broader U.S. consumer protection scrutiny. Story 2. Elon Musk's massive 2018 pay package is back on the table after a Delaware Supreme Court ruling. The hook: the Delaware Supreme Court has reportedly reinstated the compensation plan tied to Tesla's 2018 performance milestones, reviving what current reporting estimates as roughly $139 billion in in-the-money options value at recent prices. Context matters here. For months, governance questions have been an overhang. Would Musk stay fully engaged? Would Tesla need to restructure leadership incentives? And how would shareholders react if the package stayed voided? The details: multiple outlets cite the ruling as reversing a prior decision and allowing Musk to cash the package, making it one of the largest compensation outcomes in corporate history. Some coverage also notes Musk's net worth estimates spiking toward the mid-700s of billions. Impact for Tesla: this cuts both ways. On the positive side, it reduces the retention risk narrative and may stabilize Musk's relationship with the Tesla board and shareholders, which can support sentiment. On the negative side, governance critics may push back, and headlines about compensation can distract from fundamentals and invite more regulatory and political attention. Takeaway: investors should watch for any follow-on governance proposals, potential shareholder activism, and whether Tesla uses this moment to clarify longer-term leadership structure, especially around autonomy and robotics. Story 3. Waymo's Robotaxi froze during a San Francisco blackout, and it's a reminder that autonomy isn't just about sunny day demos. The hook: during a widespread San Francisco power outage that reportedly affected around 130,000 customers at peak, Waymo's driverless vehicles stalled in intersections when traffic lights went dark and Waymo paused service. Context: Tesla's autonomy strategy is fundamentally different from Waymo's, but markets often treat Robotaxi viability as a single-theme trade. Any visible failure by a major competitor can swing perceptions of timeline risk, regulatory appetite, and public trust. Details: multiple reports describe Waymo vehicles stopping mid-intersection with hazard lights on and backing up traffic. Waymo temporarily suspended ride-hailing across parts of the Bay Area. Some commentary also highlighted Elon Musk publicly asserting Tesla's service was unaffected. Impact for Tesla: in the short term, this incident can help Tesla in a narrative sense by spotlighting real-world edge cases that can derail even well-capitalized autonomy programs. But the deeper investor lesson is bigger. Regulators may respond to these events by tightening rules on all autonomous systems, including Tesla's, especially around fail-safe behavior and abnormal infrastructure conditions. Takeaway: autonomy investors should watch whether city or state officials propose new operational requirements for robotaxis, like mandated remote support, minimum connectivity redundancy, or restrictions during infrastructure outages. Story 4. Tesla is reportedly recruiting internal staff to support its Robotaxi push, which suggests operational ramp planning is getting more concrete. The hook: reporting circulating via Business Insider coverage indicates Tesla is recruiting factory workers and sales staff to help operate its Robotaxi service. Context: one of the hardest parts of Robotaxi is not just software. It's operations, dispatch, cleaning, maintenance, incident response, and customer support. Waymo and others have built large operational layers to keep fleets running. Details we have are limited from the article references in the feed, but the headline implication is that Tesla is thinking beyond the app and the car and toward a service business that needs people, processes, and probably new cost structures. Impact for Tesla: investors should see this as a potential positive signal of execution intent, but also a reminder that Robotaxi margins won't be pure software. A staffed operation introduces labor costs and complexity, and those costs matter a lot in early rollout phases. Takeaway: look for evidence of pilot geographies, staffing scale, and whether Tesla frames this as a transitional step before higher automation in fleet servicing. Story 5. Reliability rankings and safety headlines continue to shape consumer perception, and that can affect demand and residual values. The Hook. New reliability commentary, including the TV Report 2026 coverage calling Tesla a major disappointment and Consumer Report-style reliability discussion in other roundups, keeps pressure on the brand narrative in Europe. Context: reliability and quality influence insurance rates, resale values, and fleet purchasing decisions. For investors, that flows into demand elasticity and pricing power, which ultimately hits automotive gross margin. Details: the TV framing highlighted Tesla negatively versus other EVs, while separate content also referenced broader reliability rankings where Tesla sits in the middle to lower tier compared to leaders like Toyota and Lexus. Impact for Tesla: this is not usually a one-day stock mover, but it can quietly erode the premium Tesla can charge, and it can raise warranty and service costs over time. It also matters in Europe, where competition is intensifying and consumers have more EV alternatives. Takeaway: watch Tesla's service capacity expansion, parts availability, and whether software-driven fixes meaningfully reduce warranty claims. Story 6. The battery and energy storage landscape is heating up, and that's both opportunity and competition for Tesla Energy. The Hook. Reuters analysis points to China's power market reforms and the global data center build-out driving a boom in energy storage, with Chinese manufacturers positioned for major shipment growth. Context: Tesla Energy, especially Megapack, is a major growth narrative for Tesla beyond vehicles. But pricing and supply dynamics in batteries can shift quickly when Chinese capacity ramps. Details: the reporting describes improving economics for storing power in China and surging international demand, both from grid needs and data centers. That means more projects, but also more competitors and potentially more aggressive pricing. Impact for Tesla: higher global demand supports Tesla's energy backlog potential, but if Chinese suppliers flood the market with low-cost storage, Tesla may need to defend margins through software, integration, and proven performance at scale. Takeaway: investors should track Tesla's Megapack deployment cadence, gross margin disclosures for energy, and any signals of pricing pressure or supply constraints. Let's wrap it up. Today's big themes are regulation risk in California, governance clarity from Delaware, and a real-world autonomy stress test highlighted by Waymo's blackout disruption. For Tesla traders, the California DMV story is the most immediate headline risk, while the pay package ruling can support sentiment but may reignite governance debate. For tomorrow, keep an eye out for any official statements from Tesla on the California issue, any follow-up legal or administrative steps, and any concrete details on Robotaxi operations and rollout locations. If you found this helpful, subscribe to Tesla Daily News Podcast for your daily, investor-focused Tesla roundup, and follow us for the next episode tomorrow.